Welcome. We're back another day in the market. Hope everybody's doing well. Crazy levels being tested. Futures are slightly green right now. Bitcoin is currently almost at 42K. We'll start off with crypto. After that, we'll talk about the overall market. Then we'll get into some other stocks. And yeah, it might be a little bit of a shorter stream. But starting off with Bitcoin, you still have the classic bullish divergence, but it's not really done much. It's kind of just hanging around 42K for the past 2 weeks now. Still just waiting for a move. However, as long as you're above this inflection zone, so the yellow box over here, Bitcoin still looks good to me. So it's all right for right now. That's really how I'm looking at it. On the 4 hour, kind of in this down sloping channel. ACTI's getting close to green, but no divergence. Ethereum is also potentially okay. I mean, that's kind of a weird way to phrase it, but it's potentially double bottoming at the PCC of this bullish bat. So it might take some time for these to really continue to confirm, but the variables are bullish. It's just you're kind of going sideways for right now. So just waiting for one side to kind of take over. Hopefully that's the bull side. OMI pulling back a little bit today after a really good start to the year. I mean, in the last like 10 days, it's up 65%. So, you know, we talked about how it's testing this little resistance over here from these two highs, pulling back a little bit off of that level. It's okay for right now. We'll see what happens. And the overall stock market futures are slightly green. Title of the stream is that we're hanging on by a thread. It's interesting. So I'll start with like the bull scenario, and then I'll go into the bear scenario. From a bullish standpoint, if you somehow bottom where you bottom today, then you still could maybe have hidden bullish divergence, but you're hanging on by a thread when it comes to that even potentially happening. Apart from that, you are also back at a support for the S&P 500. You could see it from the lows in the beginning of December and the end of December. The last two times you were here, you rallied 4 to 5%. So we'll see if it can happen again. You're kind of back testing your previous all-time highs from September. Apart from that, you know, the Russell, it's inches below, you know, the support of this range. From if you really zoom in, it did technically confirm it close under the range. However, a small gap up tomorrow morning puts you back inside the range. So you have that. On the QQQ, you're nearing the 200-day moving average for the first time since like the COVID crash in this falling wedge pattern. On the NASDAQ, you kind of also have this falling wedge pattern, but you're currently under the demand line and you're dropping towards your lows at 14,180 or your support at 14,180 from this high, this low, and this low. So you have certain things that are going for you. If you also take a look at Bollinger Bands, this is the first time that the S&P 500 is under the lower Bollinger Band really since last May, which was kind of over here. And once you did that, actually no, that was March. But March, you were under the lower Bollinger Bands, you went up 7%. Also, I think this was May. Yeah, May, you were under the lower Bollinger Bands. I mean, technically on this whole entire rally, you went up to like 10, 12%. And then you were under the lower Bollinger Band for like 1 or 2 days in September. You rallied for the next few days after that. So historically, being under the lower Bollinger Bands leads to a sharp rally soon. But again, it's not any indicator is not a 100% probability, right? You could continue to drop down and we'll see what happens. Apart from that, you also have the volume signature I keep talking about. High volume has indicated lows for the S&P 500 for like the past year at least. I haven't really looked back past that, but you can see high volume has led to a lot of different bottoms in the market. It's very, very clear here. I'm not going to keep drawing the circles, but you have that as well. I think that's really primarily where you could stand if you're looking at this from a bullish standpoint. But you pretty much would need this to be the exact bottom for your reversal short term, in my opinion. I don't think if you drop a little bit, if you drop even just a little bit more, you take out 450 on the SPY, I don't see the SPY recovering anytime soon if you do take out that level. And then also on the VIX, you're nearing the top of this range. I think Cheddar Freeze brought it up in the Discord, but you are back above your upper Bollinger Band. Historically, when you go above your upper Bollinger Band on the VIX, you don't stay there, you end up pulling back, which would be good for the market. So Bollinger Bands are bullish for the market. You're barely hanging onto a support for the S&P 500, which is kind of bullish for the market. The QQQ is at the main line of a wedge, which is bullish, but you also have a lot of bearish things. And the clearest one is that you did technically break down. You broke under the 455 support on the S&P 500 from this gap fill and your low yesterday. That was also a breakdown of the 100-day moving average. You did break under the 100-day moving average back in October for a few days, so who knows if it's only for a few days, but other than that, you really haven't broken under it, which is your red line, in a very, very long time. So that's not good that you broke that. Also, the candle today, I mean, the bulls they stepped up for a little bit earlier in the day. There was a rally over here around leading up into noon, but apart from that, you never saw any buying pressure today. So moving over to the Russell, yes, you could just gap up tomorrow and you're back above it, but right now you are under the range. You have technically broken down from the range you've been in for exactly a year on the Russell 2000. For the QQQ, we already talked about how it broke this white demand line. You also gave up the 369.5 support today from the highs in August of last year and your low on January 10th, which was last Monday. So we had a lot of breakdowns today. The ARC broke down like yesterday. We already talked about it. Broke that demand line. Could be headed to fill the gap at 74 currently. The NASDAQ broke under the 200-day moving average. We talked about that yesterday. You got fall through price action today. So the clearest bearish thing right now is a lot of different breakdowns. So you just have to hope you somehow reclaim those levels in the short term. Otherwise, those are really, really real breakdowns, and it gets even worse when you look at higher time frames. So we go over to the weekly, you can clearly see the NASDAQ broke out its channel. We talked about this earlier in the week already. The ARC is kind of breaking that demand line. We already talked about how the QQQ gave up this channel. Russell 2000 gave up this. Like you broke down on the weekly very, very clearly. So unless you somehow rally up 5% in 2 days, it's possible, but probably unlikely. You are breaking down on the weekly charts, even for the S&P 500. You see this green channel, you've been in it since April of 2020 after the COVID crash. This is the first time, okay? This is the first time we've left our bullish channel, okay? Our upsloping channel, whatever you want to call it, which in a way shows that the market that we've had for the past 2 years, we do not have anymore. So the market is now changing. This could be the start. If we break these levels, we still haven't broken them with confirmation, but if we do break levels with confirmation, it could be the start of, for now I'm just going to say a mini bear market. You need to, I think, have a 25% or 30% decline for an actual bear market, but a little bit more than a correction. A correction's 10%. You already got a 10% correction on the NASDAQ and the Russell 2000. You're only down like 5 or 6 on the SPY, I think. We can take a look at it, but this just shows that you were not able to hold the support that you've been able to hold for the last 2 years. So this shows that we definitely are not as bullish as we were for the last 2 years. So yeah, this is a new market we are entering for now. It could change. If we somehow bounce tomorrow or the day after off these levels and reclaim them, we could be fine. It could all be a fake out. But as of right now, where the data currently is, you have broken your long-term uptrend. In a sense, you broke your demand line. You're obviously still making higher highs and higher lows until you take out like 428 on the SPY, which is another 5% lower. So until you take out that, you're still technically in an uptrend. You're still making higher lows and higher highs. Even if you were to, I don't know, sell off all the way over here, you could still argue that you're in an uptrend if you just make a higher low than those lows. So again, you have to zoom out, but of course, things haven't really been like this, right? It looks like we're just now breaking down for the S&P and the NASDAQ, but honestly, did we not talk about this? We've been talking about how most of these growth mid caps and small caps have been in a bear market since like last February. I mean, we can just take a look at let's use this really quickly. You can just look at all these types of stocks, and it is clear that all of these have already been in a bear market, okay? All these mid caps, all these small caps, they're already well off their highs. And now the S&P is just pulling off of its highs. So it just makes me wonder, right? If we're only now giving up our supports on the S&P 500, what happens to these stocks that are already down more than 50% from their 52-week high? What happens? Do they keep selling off until they're down like 90%? Because a lot of these ones, I mean, it's been nonstop. I mean, look at Wish. Like, how low can they go, right? People were buying Wish at 15, calling for a crazy squeeze. Now it's at 245, and the S&P just broke down. So by the time the S&P is breaking down, you already have all these stocks so far below. So who knows? These stocks didn't follow the S&P 500 going up in the past year. Maybe they don't follow going down. I don't know. I'm just trying to throw out different scenarios, but it is definitely a little bit concerning to look at a lot of these things. So yeah, that's really how the market looks right now. Gave up some important levels. You definitely did. So you just got to hope that you somehow can reclaim them. That's really what it is for right now. And if we can't, if we keep breaking down, if we keep going lower, then I'm probably just going to start focusing on day trading slowly. Probably won't be sharing swings for a long time, but that's okay. I know the last few times I've said, because there's been times in the past where the market looked really bearish to me, and I said, not doing any swings for right now, I'm just going to day trade. I know the last few times I kind of only did that in premium, but that's why over the past couple of weeks I've been starting to share the options ideas outside of premium as well. So if we do enter a scenario where it's just things are even more unswingable than they have been in the past few months, then I'll be sharing day trades with everybody, not just premium members. But of course, we never know. You never know. These could eventually, and this will eventually create amazing. Okay, not could, it will. This pullback, this correction, hopefully not crash, but maybe a crash, could create and will create amazing opportunities across the board. Where all these companies that you look at them last February when they were all the way up here, now they're down all the way up here. And then you look at it from fundamental valuation standpoint, you are getting a lot of deals already, and who knows what else could be left to come. So that's the overall market. Apart from that, the US 10-year pulling back a little bit. We already talked about the VIX. Gold actually soared today. This is actually the Barrick Gold Corporation stock. It's not actually gold, but it was up 8%. It's 9% today, which is a huge day. And it just broke out of this falling wedge. And it's almost like we talked about this stock literally over here. It took patience. But I brought this up on stream for like 2 weeks in a row saying how bullish it looked. And now just broke out of this falling wedge. So that's like the Barrick Gold Corporation. Actual gold right now is also moving higher. It's been going sideways for the past few weeks, and then today it saw 1.5% move up, and it broke above the 1833 resistance. Look at all of these highs at this level. It broke above it for the first time in a while. So now you're starting to see gold act like how it maybe should when you have inflation at 7%, right? But don't act like we've not been talking about this breakout on gold for a while now. So yeah, we're just in an area where a lot of these mid caps and small caps have already sold off a ton. And I do think that when we start recovering, they're going to be the first to really bounce back up. And I think a lot of these large caps have a lot of room to the downside in the short term, in my opinion. I don't think large caps are going to reverse soon. I think a lot of these, they just ran a lot. If you look at what the S&P 500 just did, I think a lot of these large caps, it might be time for them to start pulling back now. And that's why you're seeing the market only indices, the NASDAQ, the S&P, they're only pulling back now because of the top holdings in those indices. Apple, Microsoft, Nvidia, Tesla, you name it. So I personally think I prefer small caps and mid caps, but even so, like, they're still risky if you have your S&P and NASDAQ falling down, because it's not too often that you see the S&P or the NASDAQ down 1 or 2%, where the Russell's not also down 1 or 2% or even more. So it's I think everything will still keep moving together, but when we do start reversing, my focus will primarily be on small caps and mid caps. I've actually focused quite a bit on large caps in the last 2 weeks, especially for options, if you've seen the options trades, but now kind of done with those for a little bit, and maybe just looking for some 1 month, 2 month out calls on mid caps and small caps, only when we start getting bullish variables again. We don't have the bullish variables yet for the Russell 2000 or the ARK ETF, but when we get them, that's when I think the huge opportunity comes in, where something like CLOV that went from 28 to 3 might move back up to 5 or 6 really easily, because it sold off from 6 to 3 on pretty low volume, just bleeding little by little every day. That's just like an example. There's a ton of stocks, but again, you still have to wait for some sort of change in direction. Like, for just using CLOV as an example, you're still making lower highs and lower lows. You still have very low volume. You still have no support beneath you. So you still have to wait for all that stuff to develop. But when it does develop, that's when I think you have amazing life-changing opportunity, which we have not seen since probably April 2020, or maybe even May 2021 when we had the NASDAQ correction. But speaking of corrections, your NASDAQ, if you drop another 2%, you're now down 11% from your highs. If you drop another 2%, which means you'd be down 13% from your highs on the NASDAQ, that would be the largest correction on the NASDAQ since the COVID crash. You had one in September of 2020, that was a 12.74%. You had a 12% in March of 2021. And if you'd fall another 2%, let's see if it drops down to the support, what we'd be at. You'd be pretty much around your largest correction. You'd pretty much be tying your largest correction if you do drop down to that 14,180 support. So you have an official correction on the NASDAQ. The IWM's already had an official correction for weeks now, I believe. Currently it's already down 16%, but it had already fallen 10% in like December. So that's already had an official correction. And the S&P 500, which has not seen, I believe this is correct, I'm not completely sure. No, okay, you've had one official correction, I believe, since the COVID crash on the S&P, and that was in September of 2020. So that if we do get an official correction, that'll be the first one in almost 500 days. But right now we're currently down 6%. So to get that official correction, you pretty much have to drop down to this 430 support back from October. We'll see what happens. So that's what I'm watching. Going into tomorrow, I actually have a very simple plan for tomorrow, where if we break under 450.5, I'm probably going to be playing puts tomorrow. If we break back above 453.55, I'm probably going to be playing calls tomorrow. So you're back in this little support range. If we break out of it to the upside, I'll probably be looking for calls. Intraday, again, you could still get above it and then fall back in it later in the day. Same thing, you could still fall under this and get back above it later in the day. So I'm just looking for a quick day trade if we break out to either direction tomorrow. And I don't know, don't literally just take calls if it goes above this, or take puts if it goes below this. You still have to look at what the market looks like intraday if there's any news. So I'm not just saying 100% I'm going to do that. I'm still going to be looking at the 5-minute, the 15-minute, the 30-minute chart tomorrow. And if they don't line up, right, because if we rally up to 453.55 and we have a bunch of bearish divergence on the 5-minute, or you break under the VWAP while you're trying to get up there, I'm not going to be getting calls. I'm just saying roughly that's what I'm looking at going into tomorrow. So apart from that, what's outperforming the US market? The market I've been saying looks bullish for the past month at this point. The Hang Seng Index is up 2% on the new day. I mean, how many times did I say how beautiful this chart looked? Just even in the past few days. Classic bullish divergence, bullish back, break back above a nice line, break out of a supply line. You already double bottomed and broke out of this channel. So technicals are still pulling out, you know, in the Chinese market currently, and you're getting a very, very nice reversal that was definitely indicated by technicals. And I'm sure there probably was fundamental reasons that helped it out as well. But yeah. Very nice. And we even had like this little bull flag on the 4-hour that it just broke out of. So maybe I'll start focusing on some Chinese stocks. One of the swings, JD, has just been going sideways lately. Let's see how Baba's looking. That's kind of been going sideways. I need to look into a lot more of them, but that's interesting. We already talked about gold, the dollar. Look at that. We talked about this as well for the dollar, right? You had your breakdown, and I think we talked about this last night. You had your breakdown, your back test, and now you're selling off again. We'll see what happens. And yeah, I think lumber futures started pulling back a little bit. I don't know. So that's my thoughts on the market. We'll see what happens. But remember, whatever happens is okay. A lot of people act like, you know, if we keep selling off, it's the end of the world. Like, have to put yourself in a position where you can allow any sort of possibility. And I mean, you know, swings have sucked. Swings have definitely sucked for a while now. But there's going to be good times again, and you all know how the 3-to-1 reward to risk system works. The good times heavily outweigh the bad times. Just got to make it through the bad times. And then we're down what? How much are we down on the month so far for the S&P? We're down 5% on the month for the S&P, 8% for the Russell, 8% for the QQQ, and so far in the month, I mean, just last week alone, over 1,000% in potential returns for premium members, even over 100% for non-premium members. So the options are still paying. So even if we keep selling off, I'll still be trading, day trading, and I'm pretty sure I think it's 10 green weeks in a row, 10, 11, 12, something like that. It's just been non-stop green weeks. If you're a premium member, I don't remember the last time we had a red week on options. It just, knock on wood, it doesn't happen, but options have just been amazing for a long time now. Honestly, ever since I started sharing options, they've been amazing. So yeah, and there were probably a couple puts here, but most of these were calls. This week I also tried to play a couple puts today, and we'll talk about it in a second, but really frustrated with how I played the market today. I was really off on the intraday moves today for the first time in a while, but yeah, market's down 5% on the S&P, 8% on the Russell, and we've primarily played only calls this month, and there's been a bunch of profits. So even though it's not easy to swing, you can still go long on stocks intraday and find amazing opportunities, because if you're gapping down and pulling back, you can look for an oversold RSI and bullish divergence and a 5-minute wedge, and you could play a small move with options and make 30, 40, 50%. So just going to keep focusing on the options. If that's working, that's working, and whenever the swings are ready to start working again, you all have seen what we've done before with swings, and we'll do it again. But for right now, you gotta be patient when it comes to that stuff and just wait for more data. So yeah, and that's why I'm starting to share this over here, because I know it's not fair if I can't be sharing swings, I'm just sharing nothing with everybody else in the Discord. That's why literally the last 5 swing alerts were options and not swings. So I'm going to be sharing them here as well. If you're not in premium, it's all good. A lot more to come. And if we really just can't swing things for a while and we actually seriously break down, it's going to be a lot more than just this. You're going to be seeing multiple every single day. So we'll see what happens, but we have to get there first. So that's the market. Let me see the chat. Hit the like button, hit the subscribe button. Remember, market could go up, down, sideways. You can always find a way to make money, and that's the whole entire point of this stream, and that's why you want to show up, all right? I just moved that level down? Yeah, I did. So yeah, let's get to 20 likes. We got 35 people in here. I know it's not the best day in the market, but we're looking over things. We're looking for opportunities. Hit the like button. If you're not subscribed, to the subscribe button. I think last month was like the lowest amount of new subs in like the last year, unfortunately. But what's up, Frank the Tank, Mr. 90210, Plebberay, Laidback, Maxime, Eric, Cheddar Freeze. Oh, we also have earnings season. I forgot to mention that. Netflix reports tomorrow. GT, Cheese Puff, Nerve D. Cheese Puff says it seems like it's so much easier to short stocks. It is until it's not, you know. For a lot of these mid caps and small caps, that's what it has been for the past year almost. But until it's not, until you randomly start reversing, and you could go up very quick, because you have to remember, when a lot of these stocks that are down so many percent from their highs, at least like half of their trip down was on low volume. So, you know, you don't need that much volume for them to start going back up. However, you are going to have a lot of back holders in most of those stocks that are probably going to want to cut on bounces. So you're going to probably need catalysts and some help from indices, and who knows. Yeah, also the Head and Shoulders. I know somebody in the Discord messaged about this morning, asking me about it, and I think Cheddar Freeze answered it for me. But potential inverse Head and Shoulders here on the S&P 500 as well on the 4 hour. Nerve says life-changing opportunity sounds good. It surely does. D says options have been a blessing. They surely have. Big Ol' Squirrel says I wish I was better at picking companies to invest in. There's easier times and there's tougher times. These are the tougher times right now, where, you know, at least large caps were doing well for the past few months, but apart from that, so many other stocks. We really did have a silent stock market crash for everything outside of large caps. Well, not everything, but many sectors outside of large caps. We really did have a silent stock market crash. And that can't be argued if you look at how many stocks fell more than 50% from their 52-week highs. Jamie says, your entry was off on the SPY put, but I was proud of you for finally turning bearish and starting to share ideas for puts. That the market gives us. Yeah, we've actually done pretty decent playing. I don't know if you're in premium or not, but I don't share puts. I'd probably say there's like probably about 15% of the time I share puts and 85% of the time calls. That'll definitely change if we start breaking down from these levels. There'll be a lot more puts. But we've actually had a really good amount of put trades and premium. However, today, we'll go over it right now. I couldn't catch a break. So I was right about puts overall because we did end up going lower later in the day. But what basically happened was today, I shared quite a few puts, you know, in these areas. And, well, that was yesterday. That was today. So I shared quite a few puts around over here. Let me go back and look at what they were. So I shared SPY puts with premium members today. I shared two. All right, it wasn't that many. I shared two. But I shared SPY puts with premium members and snap puts with non-premium members, and just bad timing on my end intraday. I still think, I mean, SPY could go lower. And again, so look, all right, let me just recap really easily. I shared SPY puts with premium members, and it probably was, yeah, it was like right over here. I shared SPY puts because it looked like we were breaking down, I believe. And then literally you made this move, and then I had to stop out the puts on the sheet because I have a 20% risk for the sheet. So basically, whenever I share an option, most of the time, if it goes down 20% first, I mark it a failed trade. If it goes up 20% first, I mark it a winning trade. And there are certain times like this where it screws you over. However, I will say, and I think most premium members can back me up here, the 20% rule has actually worked really, really, really well. Where again, it's not really like you're using technicals, and you want to obviously be using technicals, and just because I mark a green or red on the sheet doesn't mean you have to buy or sell anything. But there's been many times where a call went up 20%, and then that was literally the top, and then it fell all the way back down. And then there's been many times where a call went down 20%, and then after going down 20%, it went down like another 20%. So the rules worked out really, really well, but it screws you over sometimes, like today, where I'm sure they were, I mean, they stopped out probably by right here. So they're probably down 30 or 40% at this high over here. Again, they were puts, they were not calls. So when the market was going up, the puts were going down. And then the move came. So I had to mark them as a negative 20% loss on the sheet. But as you were selling off into the close, those same exact puts that I shared with premium members were up 50%. So basically, you know, I was able to identify the bearish looking intraday technicals, but my timing was just horrible today. I even shared some NKLA puts, which went up. They were actually in profit. I think they were up like 10% or something. And then I ended up just marking them as a break even. But I mean, speaking of NKLA, we can go to it really, really quickly. Where is it? Right here. It broke down to a new all-time low today. It broke down from this head and shoulders. So I shared puts with premium members. It went down, it went up. I just marked them a break even. And then I also shared snap puts with non-premium members, and yeah, it did this. Puts were shared probably somewhere around like over here. You went down like a little bit, and then it just shot up with the market. The puts got stopped out, and then later in the day it made the move back down, but not back down to the low. So just a stressful day trading puts, even though puts are probably the easiest way to trade the market today. I don't know, sometimes things just don't go your way. It might just be luck sometimes, but you know, I always admit when I'm wrong. I don't have any issues with that because you all know I always go crazy when I'm right as well. So I have no problem talking about when I'm wrong. But yeah, just a little bit of a couple of hiccups trading puts today, but you learn from stuff like that, so it's all good. Cheddar Free says, don't sleep on the analysts in the Discord. Jono smashing the mining stocks. Yeah, all the analysts have been doing amazing. Make sure you join the Discord. The link is in the description if you aren't in already. This is where all the other Discord analysts post what they're looking at. It's not just me in here, okay? There's a lot of other very, very smart people in Discord that are sharing a bunch of analysis, so make sure you go check that out if you're not in the Discord. So now let's go over the swings. Most of them have pulled back. Again, it's not really easy to swing things when the market's down 5% on the year already for the SPY and 8% for the, I think we said the QQQ. Tesla's down 8% since the entry. You just want it, it's hanging on by a thread. Most of the swings, they're just hanging on by a thread. You just want it to hold above your low from January 10th. That's literally it for the update. Beyond, is it still back testing? It still kind of is back testing this previous supply line as a demand line. I don't know. There's not really much of a structure here on lower time frames, and you're still just kind of in this range between like 62 and 70 on the higher time frames. So just waiting for a larger move to either direction for a little bit more guidance. SONO, there's really not a lot of support left currently. I believe the stop is just under, is it under this low? 25.56. It's pretty much around testing these lows. So SONO hanging on by a thread. You're probably gonna need the market to reverse for that to not stop out. JD, remember we've been talking about those Chinese stocks. We've been looking at the Hang Seng Index. The swing is still up 4% since the entry, but it is still in its range between 71 and 74. So just waiting for it to break to either direction. AMC literally hanging on by a thread. Its stop, I mean, the stop is 8 cents lower than where it closed today. So it's testing this demand line. You still have potential classic bullish divergence, but again, you're going to need the market to help you out on most of these swings, okay? SPLK was actually up a little bit today. No technical change though. And then these ones, SU and VLO, they already hit targets. They're just kind of going sideways now after hitting their second target. So yeah, that's really it. There's not too much to update. There's not too much to update on, but I already showed you all NKLA. I mean, if we do actually break down from these levels on the market, I actually did some scanning today for stocks that hit 52-week lows, and basically I ran through like 200 stocks today, and I looked for stocks that were not just kind of doing something like, I don't really care about stocks that are doing something like this. Actually, that's not the best example. Let me think of something. Wish. All right. I'm not too concerned about stocks that are doing something like this, where they're selling off like this. What I've been looking for is stocks that are doing something like this. Okay. Kind of the straight down into a support level. So the stocks that are kind of selling off and they're just curling to the side and kind of creating these wedge looking like formations, I'm not really looking at for maybe puts later on in the next couple of weeks. I'm just kind of going to leave them alone because a lot of these stocks could be the first ones to bounce back up when we do start bouncing. You have the divergence, you're probably creating wedges, you know, on a lot of these different names. So I'm not interested in ones that look like this. But what I did was I put 52-week lows on my scanner today, and I looked for stocks that were breaking down. They were kind of heading straight down, and they were either testing a large breakdown or they were actually breaking down from a support. So for an example, NKLA, right? It wasn't really curling down. It kind of just started going straight down, and it ended up breaking its only support at $9 today. So this is one, again, none of this is financial advice, and it completely depends on the market. These are just very, very rough ideas, only if we actually confirm breakdowns and we keep selling off of the market. But NKLA is one of them. I'm looking for more downside on if the market actually breaks down. Snap is another one. If you give up 34.52 on Snap, you have literally no data or support until like 29 bucks and a gap to fill at 29. SRPT is another one. It broke under these lows over here from July and even gave up a previous high from September of 2016. I even charted the next levels of support they have. So I'm pretty much looking for stocks that are just now testing a breakdown or actually breaking down from supports, and they don't have much support left under them for at least a few percent or whatever it is. So this one has some more room. NAT is another one. This one's testing. You can see it's not really curling down. It's just kind of going straight down recently, and it's dropping into this level, 165. And if it breaks this level, then there's no support left. So I'm looking for stocks like that to play puts on if we confirm breakdowns. Another one is Uber. You see it just gave up this $38 level from this low and these highs. It could make a move down to this next support. FCEL. This one's kind of been somewhat curling down, but I don't know. This one, it didn't really break down from a level, but there's just not much support until like 379 on this, which is a gap fill. QS is another one that just broke down today. It broke down from the 1930s support from this low and this low. Now there's not much support until this gap fill. Apps is another one. This kind of already played out quite a bit intraday. I think I charted it like up over here and it just kept selling off. So this one's already kind of towards its next support. Workhorse just broke under 377, which was a previous resistance. Did not use it as a support, and now it does not have much support till 261. And then finally, this one was another one that I charted this when it was like up here during the day, and then it kept selling off. So this one kind of already played out to an extent. It's already getting closer to the next support, but those are the types of stocks I'm looking at to play downside on, whether puts or short. If we break under 450 on the SPY, if we confirm under that, if we start making lower highs and lower lows for real, okay? And I'm not trying to tell you to go and get puts on all of these. You have to wait for confirmation, and of course you have to think about fundamentals as well. I mean, a lot of these stocks could be severely fundamentally undervalued, so it's not just technicals you have to think about as well. All right, so those are just, I'm just giving you this list as like education. Those are the type of stocks that I want to play, not necessarily because they're the only ones that are going to go down, just because you have clear levels that you're breaking, which you could place your stops just above. So for an example, on something like SRPT, no, it's not the best example, Snap, okay? I'm looking for the ones that are just, you're looking for a very clear level of previous support or resistance that you're breaking down from, and then you're looking for the next support for it to drop down into being far away, okay? That's what you're really looking for, not financial advice. So for example, on Snap, if this were to actually break down and the market confirms a downside move, you could look at it something like this, right? You can maybe enter on the break of that rather than me messing up with the puts today. And then you could literally have the smallest stops ever, because if they get back above the levels, then you just take the small stops ever. But again, you're getting that reward to risk. It's very similar to what we do on the long side. We look for stocks that are very close to support and that they have no resistance close to them, right? On something like BLO, we looked at this stock to enter right when it was around its support, and we looked for it, and we were liking it because it didn't have any resistance that was close to it. So you're kind of doing the same exact thing, but on the downside. What chart was I just on? Snap. So it just gives you reward to risk. That's what I'm looking for. The same exact thing, but you're just kind of flipping things around, right? So look at that, right? Even if you extend that stop a little bit, you can easily develop the reward to risk. So that's kind of how I'm looking at things. Hopefully that was educational. I don't know. But yeah, that was a little watch list I created today that I sent to premium members in this channel. So these are all the charts I just showed you. NASDAQ futures bouncing on the 200-day moving average, says Chet Freeze. William says, is Hood going down to 10? I have no clue. There's not much support for it. It hasn't had support in a long time. But we'll see what happens. So yeah, that's my thoughts on the market currently. If we somehow get a 2-day rally right now, that could save everything. If we don't, we could keep selling off. We could see an official correction on the S&P 500. And maybe just wait until it gets oversold. I mean, is it oversold already? I don't think it is. Yeah, you're not oversold yet on the S&P. So, you know, if you break down from one level, wait till the next one. If you never get to the next one, wait till you break above back. All right, let me say this a little bit slower. If you break down off of a level, wait until you get to the next one. If you never get to the next one, wait until you break back above the level you broke down from. For an example, let's say we're breaking down the S&P and we actually confirm it in the next 2 days. Wait until it gets to the next support, whether it's this one or whether it's this one or whether it's this one. If it never gets to any of those and you just start going back up, wait until it reclaims the level it broke down from. That's how you look for confirmation for some sort of a short-term trend change, okay? Don't just randomly think, okay, it's dropped down to the middle of nowhere, but now we're down a certain amount %. Wait until you have some level you can play. It's not about being perfect, about calling the top or the bottom. It's about finding the best level that you could play around with the best risk management. That's how you can overlap success with trading over time. All right? Not just picking random levels because you want to get the exact top and bottom. Most of the time, you're not going to get the exact top and bottom. What you want most of the time is clear levels to manage your risk with. All right, so keep in the like button if you didn't already. Cheddar Free says, let your charts tell you what may happen, not your guts. Confirmation, absolutely. So yeah, if you want me to look at any charts, I'll look at like a few right now. I don't really want to look at that many. Just because what matters the most right now is the overall market. We can look at all the individual stocks in the world, but you got to focus on the overall market when everything's just kind of moving together. So yeah, if there's any charts anybody wants to look at, we'll look at, I don't know, 4 or 5. And yeah, make sure you join the Discord, links in the description. Watch the free course if you want to learn about all these different things I'm talking about in the stream. Link is in the description. Follow me on Twitter at ChampionVibe. If you want to join Premium, that's the first link in the description. Prices will be going up the next couple of weeks. Prices have not raised since November, I believe is the last time they raised. So I'm going to be doing another price raise. This was all scheduled out last summer. I told you this schedule that the price was going to be raising every other month. This is actually going to be the final price raise for a while. So if you want to get in before the final price raise, You have the next week or so probably. I'll let you know when I do raise them. But after this, I'm probably not going to raise them for at least a few months. All right. And if you want to find out what is in premium, Cheddar Freeze just dropped it in the chat. It's the first link in the description. When you get to the premium sign up page, you can either obviously read everything, but you can look at the walkthrough video over here, you can look at the member reviews over here, and you can look at my options trade results, which I need to update that tomorrow because it has not included this month at all. And the last time I updated that was like the last day of 2021. Let me put that on my to-do list because we have another 1,000% in profit so far this year that I have not included onto that yet. All right, so you can go check that out if you want to. If not, all good. Just join the Discord. And thank you for dropping the link, Cheddar Freeze. CAG. That's kind of how I view it. That is a bullish structure. You also broke above the 200-day moving average. We really zoom out here. Never mind. It's psychology of it's similar to an inverse head and shoulders, but it's not really that parallel, and it's very large. However, regardless of any inverse head and shoulders, you have this major historical resistance zone between these levels. Okay. If you ever break above that, that could be very good. However, breaking above that's not going to be easy because you have not been able to do that since 2017. So now you're re-entering the resistance zone. You could run all the way back up to the top, test it, who knows. But I'd say short-term support is 35.13, which you're just about above from the highs over here, the lows over here, the highs over here. So you're back into a historical range, kind of. Are we testing a supply line as support on XLF, also 100-day? It is testing the 100-day moving average pretty much. And then are we testing a supply line as support? I think you're looking at it like this. And the answer would be yes. However, typically, whenever you're back testing, I don't really prefer when you break out and you keep going and then you back test like way later on. When you back test, I want to see it break above, back test immediately, and then go up. Because the back test later on, people forget about the trend line, and a lot of these technicals are working because other people are charting them out and playing off the levels. It works both ways. Other people are looking at the same technicals as you, and they're trading the same way you are based on what's in the technical books. And at the same time, the technicals are pulling out because they represent psychology, whereas if you see a double bottom on a chart, that means not twice. Not once, but twice, people were betting that the stock will go up, which increases the probability of the stock going up, right, if there's buy orders coming in. So, sorry for that little rant there. But yes, it is. However, I prefer quick back tests. I'm not just saying it for this scenario like it's not going to play out. It could definitely bounce here. I'm just saying for some education there. But yeah, I mean, if there's any area where you want this to bottom, it's pretty much around here. 100-day moving average supply line, you were definitely looking at that correctly. You even just filled a gap pretty much today. So you are looking at that correctly, but we'll see what happens. XLF bear shark playing out. It's probably this. I don't know. T-Mobile. How's AT&T doing? Who remembers AT&T? Wow. I'm gonna be very annoying about AT&T for a very long time, okay? While the whole entire stock market has been declining, not the whole market, but most of the market's been declining so far this year, look at AT&T just going up and up. I mean, if only somebody was able to see how bullish it was at these lows, like literally at the exact lows. Oh wait, all you had to do was watch the stream. I mean, I try to scream it as loud as I could. So, I mean, these are what you watch. These types of charts are what you watch the stream for. I mean, these are the insanely just. It's almost free money, but it's not, because there's no free money in the market. There's always a risk of something not working out. But again, it's more free money in the sense that you have insanely bullish variables and high probability aligning at the same price point with easy risk management. That's why it's kind of, in a sense, close to free money, but of course nothing is. It's just because the risk was so low compared to the potential reward down at that area. But like, talked about all of this at the exact close. I mean, this is like something if I were to start I'm actually starting to really look into NFTs, but if I were to make my own NFTs, it's probably like the first one. I don't know, probably Fisker would be the first one, but this would be one of the first ones. Like, this is just like the most like the formula I use for technicals, literally everything was on this chart, and there you go. I mean, again, it's AT&T, so it moves slowly, but 25% in like a month and a half is very, very good. It's not really a slow move, but you had so much. You had the support, the oversold RSI, the bullish divergence, the bullish shark, the bullish crab, the 1272 fib retrace. It was beautiful, and now it's playing out. So if anybody got leaps or anything, congratulations, you're probably up a lot of money. And I don't know, I forgot about it for a couple of weeks, just want to look back at it. But did we look at T-Mobile? Can't remember. I don't think we did, so let's actually look at T-Mobile now. Let me go back to the weekly for a second. There's not much to talk about in the week. I look at it as a descending broadening wedge. However, it is kind of breaking down technically. You'd want it to get back above that blue zone I just charted. It was resistance here, support here, and now you're back under it. You have another support around 104 from these lows and this low from January 10th. If you break that, then that's your next support. If you can somehow break back above that blue zone, I'd say your next resistance is all the way in these areas, 114 to 116. So those are your levels, and that's the chart. Library says, LOL, I remember the stream where you were preaching AT&T. I mean, when I see a chart like this, I can't do anything but go crazy about how beautiful it looks. Like, this is like so many different legends of technical analysis work combined into one chart. Laid Back One says, I took 120% profit from AT&T thanks to you. Glad to hear that. Good job. Oh, what's up, William? So, yeah, I guess that'll be it for tonight. It was a pretty good stream. Hopefully you enjoyed it. We talked about a lot of different charts, and all of you were great in the chat tonight. So, Bitcoin's back above 42K. Futures, they bounced up. You're up about a 0.5% currently overnight. We'll see what it looks like in the morning. The next 2 days in the market. The data you get in the next 2 days of the market will probably decide the next few weeks in the market, okay? You don't have that often, where just only 2 days could decide a few weeks. These next 2 days, you're at your make or break areas, all right? These next 2 days, it could be not financial advice. It could be okay to just sit back, collect the data, and wait for some confirmation. Of course, you might get some nice little trading with all the volatility intraday, but I'm just saying as a swing trader, you're gonna need some time, all right? Wait for the probability to align, wait for the confirmation, and whichever side it is, you can profit from, all right? Don't be upset if you break down. You can make money to the downside, all right? Remember that. You can't only make money to the upside. You can make money to the downside as well, all right? So whichever way we break, don't be mad about, don't be happy about, just play it with probability and risk management, not financial advice. I don't know. How many times do I say it every single stream? Whatever. But yeah, all right, good luck if you decide to trade tomorrow. Have a good night. we forgot to talk about Fisker. Today 32, thank you for reminding me. Just because I moved it on my watch list. It was with all my swings on my watch list. Look, these are the purple ones are all the ongoing non-premium swings. Fisker used to be here, and then I moved it all the way up to over here. So yeah, I just missed it. But yeah, let's talk about Fisker and CLOV. I moved both of them today, so I forgot to bring them up. So let me talk about both of them before we get out of here. Fisker, it gave up a lot of levels. You broke down. You broke down on Fisker. We already talked about it yesterday that you broke down from the 1450, a very important historical level. That broke down. You got fall through today. You're just barely testing your October lows right now. If that breaks, then your next support is around 1220-ish, all right? So you're kind of out of support. If you have a nice little bounce tomorrow, you're back above the 1350 important level, and then maybe your oscillator starts developing classic bullish divergence. If you don't get that bounce, you're probably going to head back down to 1220 eventually. And that's your next level of support. We'll see how it looks over there. But it's basically, in my opinion, you bounce here, and that could be your bottom. If you don't bounce here, probably going to see 1220 within a few weeks. And then resistance is 1450, and the CLOV, it's kind of under the domain line of the wedge. You have confirmed hidden bearish divergence on the daily now. You are still oversold. The 4 hour is still in this downsloping wedge. It just needs some time for some bullish variables to start popping up on the chart, and whenever it does, hopefully it can actually do something. So that's CLOV and Fisker. Sorry I forgot to bring them up, but there we go. Have a good night.